Matthew Harrigan, Senior VP of Equity Research at Wunderlich Securities. He follows Disney, and he joins us from Denver, Colorado this morning. Good to have you on the program. So that is a good question. Can Disney keep up these sort of numbers?
Well, I think the quarter was actually, fairly decent. I mean, we've been cautious on the stock. I thought the animal spirits were getting a little frothy, coming in. Looking at the December quarter, I thought it was pretty apparent there wasn't a lot of revenue upside at the broadcast business, ESPN, in part because of timing on sports events, and certainly the studios where they're constricting their release, schedule, and they didn't have as attractive a slate last year. So I thought the cost elements in the quarter were impressive. And, I honestly, I thought it was a better quarter than I expected. I'm not surprised it came off a little bit after hours because I thought it was getting to be a little bit of silly season.
Okay, that's right. Well, I think you buy on speculation, you sell on the news. So what about this profit at their resorts and parks? I mean, weren't we talking about a double dip in the U.S., but still, we still had higher visitors and higher profits at these theme parks?
Well, I think that the parks attest somewhat, one, to the attractiveness of what Disney management has done. It's a relatively, high capital intensity business, but they certainly, deliver some compelling attractions. I think it also attests to the, bifurcation in the U.S. consumer. You do have a lot of high-end consumers at those parks, even though they're also emphasizing, value family suites as well. I think there's a slight crimp in the attendance in some markets like the U.K. Conversely, I mean, there's some markets like Brazil and Mexico where the attendance at Disney World is pretty healthy. So I thought the park numbers were pretty decent, but that was really the only bucket of revenue upside. The other businesses were fairly, stuck in the mud as far as the top line went in this particular quarter.
That's right, Matthew, especially with their ABC broadcast network. In fact, we saw profit there dropping about 23%. So do you scratch your head when you hear talk of Disney maybe looking to buy up Univision to create a cable news channel?
Well, they wouldn't actually buy Univision. They would do a cable news channel, ABC News and Univision, and there's some debate as to the particulars. Iger would not really comment on the call. I think certainly it's something that's at the margin as far as Disney goes in terms of the potential opportunity. I mean, they're doing some really interesting things. Getting more involved in India with the UTV further purchase, and where you are, Shanghai. So I think the company's best growth vector is probably overseas, and I think that the Univision possibility is certainly attractive, but it's something that's really tiny when you look at the global opportunities that are available to Disney.
Okay, Matthew, so all in all, is Disney a buy at these levels?
No, we have a hold on the stock, and I think some of what's happened in this market with people getting more pro-cyclical and looking for operating leverage in that regard has led them to buy Disney, but I still think it's a little early here. The ad market is okay. It's not great, and the free cash flow yield in the stock is not comparable to a lot of other entertainment names like, say, a Viacom.
Okay, Matthew, thank you so much for your insights. Good talking to you. Matthew Harrigan, Senior VP of Equity Research at Wunderlich Securities in Denver, Colorado this morning.